Well, welcome everyone to this evening where we discuss all things fintech. I am your host, Anagha.
I'm your other host, Vaishnavi. And before we jump in, we would first like to introduce Tether. So, who are we?
In a nutshell, we are fintech enthusiasts. But there's more. Tether was conceived by like-minded individuals with backgrounds in the financial services ecosystem. In addition to being a converging point for all things fintech, Tether is a place to learn and grow. The community also functions as an open forum where participants can reach out to industry experts, making the whole community bigger.
Join our community, and whether you're a fintech startup looking for investors or a fintech enthusiast wanting to keep up with the latest in the world of fintech, Tether is the place to be. Presenting to all of you a sneak peek of Tether through a video.
The strength of the wolf is the strength of the pack. The strength of the pack is the strength of the wolf. Since our founding, M2P has wanted to give back to the community we grew from, which led to the birth of Tether. Tether is a community for like-minded people from across the globe. This includes startup founders, fintech professionals, students, and enthusiasts. Tether, with thousands of members like you, will act as a catalyst in the growth of the fintech industry. Tether also acts as an open forum where participants can reach out to industry experts, learn, and grow. You can achieve mentorship from industry leaders, mentorship for funding, an opportunity to network with peers, and access to a world of events apart from a host of services. Join your peers today. Grow together, tether together.
Perfect. So while you're waiting, you can quickly log on to tether.community right now and become a member. We're sharing the link on the chat, and the link is now available on the chat section of your screen.
Jumping right in, Buy Now, Pay Later, that is BNPL, is a game changer for the entire payment sector.
The BNPL, the apex innovation in payments, is it the future of payments in India? How does it propel small businesses? So let's get some answers to more such questions today.
To shed some light on all things BNPL and to help us better understand it, let us welcome our esteemed panel.
Gorav Gupta, the founder and director of Digimoney Finance Pvt Ltd, is an ace in the entrepreneurial space with a strong core in accounting sector. He has extensive experience auditing large Indian and multinational companies and is a tech enthusiast. In addition, he is also the co-founder and director of ActSource KPO Pvt Ltd, which pioneers value-based outsourcing models for accounting services, primarily for public accounting firms and SMEs. So hearty welcome, Mr. Gupta.
Next up, we have Mr. Chayan Hazra, head APAC Payments Business at Pine Labs, is a renowned expert in the payment space. With over 2 decades of experience working in established organizations like MasterCard, Deutsche Bank, and HDFC Bank, he has extensive knowledge in the banking and fintech ecosystem. We are glad to have you here, Mr. Hazra.
Just to complete our panel here, perhaps, Mr. Mani Parthasarathy, the co-founder and CEO of Habile Technologies, is a well-known fintech expert. Having more than a decade of experience, he stays on trend with the latest fintech happenings, and his LinkedIn hashtag Money Speaks Money is a treat to all the fintech enthusiasts out there. And just to add on, Habile Technologies provides digital lending solutions to NBFCs, fintechs, and banks across 9 geographies. So we are happy to have you and welcome here, Mr. Parthasarathy.
Thank you so much, Vaishnavi and Anaga. It was a pleasure being here.
A quick note to the audience before we move on to the panel discussion. You will definitely have questions. So if you have any of those questions, there is a small Q&A section at the bottom of your screen that you can see. So please share them on the Q&A section, and it'll either be on the bottom or on the right-hand side. We will have a short Q&A session right after the panel discussion, and our speakers will definitely try to address as many questions as possible. On that note, let us flag off the event, and we are handing over to Mr. Mani to take this forward.
Thank you, Anaga. Thanks for providing this opportunity. Being interviewed more than 50 plus fintech experts in this area. So I'm really glad to have Mr. Chayan and Gaurav as a panelist. Thanks for joining again, Gaurav and Chayan.
Thanks, Mani. Thanks, Mani, for having us again.
Yeah. Cool. Again, so let's start with the basic fundamentals, right? By the way, Gaurav heads the NBFC and Chayan from the payment space, right? So we have two different sector altogether, and their perspectives will give a lot of inputs to this audience in this particular session. So coming back to the fundamentals, right? So Gaurav, what is actually is BNPL and how many stakeholders are there? Who are all getting benefited out of it? If you give a quick background about that, that will be a great help.
Sure, Mani. So first of all, good evening, everyone. And thank you, Tether community, for making us part of this panel. Firstly, let me introduce Digimoney. So Digimoney Finance is an innovative technology-based lending solution for individuals, small and medium business owners seeking private finance. Digimoney is a Reserve Bank of India licensed non-banking finance corporation, a fintech plus NBFC combo that enhances the customer journey. So Mani, coming to your question. Now, what is BNPL? BNPL is a short-term financing option that allows a customer to buy a good or service and pay it off at a later date without the use of a traditional credit provider. The buy now pay later system is an updated version or a glorified version of the barter credit system, which has been in use for ages. As this is a loan at the point of sale, it is offered at the merchant or seller's point. If online, then website or app checkout. Obviously, the online BNPL model is emerging as the fastest growing e-commerce online payment method in India, estimated to capture 9% of the total e-commerce market share by 2024, according to the global payment report by WorldPay.
Okay. Interesting.
Yep. And this is the information age, Mani, and people are very smart in making every decision. It is important to remember that the customers are in control with buy now, pay later. They can choose how much they want to spend and how long they want to spread the cost over.
Okay.
This flexibility can be a great way to stay on top of their finances. Now, coming to the stakeholders, there are three key stakeholders in a BNPL arrangement: the seller, the buyer, and the BNPL lender company.
Okay.
Now, of late, there is also a fourth stakeholder in the form of aggregators. For instance, Swiggy, Zomato in for delivery, Amazon, Flipkart in e-commerce, and cab aggregators like Ola and Uber offer these services in collaboration with BNPL partners, or they have their own BNPL arm. So the BNPL arrangement offers a compelling value proposition to all the four stakeholders in a transaction, which has helped this category to gain this much of popularity. With this arrangement, the buyer can purchase items they need now and pay for them over time. The sellers get paid for their sale immediately, bettering their cash flow. And there is increase in sale as BNPL gives better purchasing ability to the buyers. Finally, the BNPL lender makes money by charging a small fee to the buyer or a subvention arrangement with the seller. So in India, we have pure pay BNPL players like Simple, Lazy Pay, Zest Money. And I'm sure today everyone is talking about Zest Money. There is some news coming in from the market that PhonePe may buy Zest Money in a big consolidation move. So it is certainly going to be a game changer. So that's pretty much about my understanding of BNPL money.
Great. That actually, it's like it's a good start, Gaurav. By the way, we had this discussion with Madhu from M2P, right? So he was saying that BNPL is a old wine in a new bottle, right? It was been in ages. And Chayan, over to you. Like how, though it is an old product, right? How big the sorry.
Okay. So lending or credit, right? That I want to buy something, I don't have the money right now, I will give it to you over a period of time. It's not a new concept, right? If you go back in history, even people in Roman days, started using BNPL or sort of BNPL to pay taxes over a period of time. The church used to do it for pilgrims, so that they can go for pilgrimage, and I'm talking, this is like 1500, 16 for 1400, 1500, and people used to pay it over a period of time. Now, in the current modern setting, as an industry, and those are all maybe more a public funded kind of a arrangement. If you see as an industry, I think it kind of started in US around late 1800s, early 1900s. And I was telling somebody, interesting thing is that the company which kind of made it an industry was a sewing machine. So Singer, in fact, was a big hit in US for the first time, because they came up with this concept of buy it now, make a living, and started telling the housewives, you can now earn additional income, and guess what, you don't have to pay us all of that in one go, and you can. And again, if you look at early 1900s in US, you had BNPL for everything. In 1930, 1940, a lot of airlines used to run BNPL, right? You buy a ticket, go for a vacation, come and pay it over a period of time. So it's been there. Then, of course, you have seen over a period of with credit cards, giving installments or IPPs and making it easy over a period of time. And that's been a product which has been very popular across the globe, right? With the credit card companies. Last 2-3 years, people and the fintechs or the technology companies just use technology to kind of, as Gorav was saying, right, create a new user experience at the point of sale. So it's kind of instant credit. You don't have a credit, you want to buy something, because as a consumer, if I already have a credit card and there is installment available, I always had that option available. So it was primarily for people who didn't have a credit option available or didn't have a pre-approved credit before they were going in, and they wanted instantly something. And that's how it kind of caught off. The other place it kind of caught on was non-traditional installment categories. Because historically, what had happened is that the banks or companies like Pine Labs and all, we have terminalized those merchants who are traditionally BNPL categories or installment categories. So if you see Afterpay or if you see Klarna, one of the biggest segments they have is fashion. Now, if traditionally nobody talks about fashion, cosmetics, all of these for BNPL, because the ticket sizes are relatively lower, and you think that you will be able to afford it. But guess what? The new crop coming into who have just started working, they even want to manage that, right? Even if I want to buy a 2,000 rupee shirt, I don't want to pay it. I want to pay it, let's say 200 rupees into whatever over a period of month. So I guess. And with the advent of technology, e-com, apart from the big boys like Amazon and Flipkart, nobody had that many options of paying with installments. And it's not only here; it's actually globally. If you see e-com, physical stores still had it because over a period of time the industry but physical online didn't have it. So with BNPL, it's an easy plug-in. Somebody goes there, I get an instant credit, and wow. And therefore, the industry took off. And suddenly it became like, Anaga was talking, the coolest thing on, the fintech circuit was BNPL.
Interesting. That gives a global perspective also, Chayan. Thanks for that. But coming back to this market, right, Gorav and Chayan, that people used to confuse buy now pay later with the credit card, right? So they want like to understand what is the difference between credit card product versus the buy now pay later, right? So can you give a brief on that, Gorav?
Sure, Mani. And it's a very good question. Everyone crops up with this question cropping in their mind. And see, the most important and primary difference between a BNPL and a credit card is that the BNPL offering comes mostly at zero EMI. That is, there is no charge associated with the customer choosing to pay in installments. Okay. Now, that does not mean the BNPL companies do not make money. They certainly do. And they do it by earning subvention fee from the merchants or the seller. The other difference are that credit card companies have been charging high interest rates in the range of 42% to 48%. And the penalties are also quite hefty. However, the interest and charges by the BNPL companies are much lower. So they have a very low operational cost when it comes to these BNPL companies because they're high on tech. So to avail a credit card, one requires a good credit history as well as complex documentation. Whereas in case of BNPL, the onboarding is instant and underwriting mostly simple and automated with the help of alternative device data available to the BNPL service providers. Now, there are many consumer segments such as self-employed and lower income that are not preferred by credit card providers. And these are the consumer that many BNPL lenders reaching out to. So these are the primary differences, in my opinion, from between a credit card as well as the BNPL arrangement.
Okay. So this on a financial construct, right? Maybe to dig into that detail, Gaurav, as a financial construct, be it as a percentage or a principal value or the payment mechanism of a credit card versus BNPL, if you throw light on that, that would be a great help. So how does the credit card work versus how does a BNPL work?
Yeah. So, So credit card is invariably, it's a free credit available, but for a limited period. So you can see that there is always a credit provided for 45 days. That is until 45 days. If you make the repayment, you don't have to really pay any interest. So this is the free credit available. Now, whereas in BNPL, this free credit limit itself has been enhanced. So if you look at most BNPL companies, they start with like 3 months free EMI. There is no EMI at all. Similarly, there are, if you look at the charges. So when do you start charging a credit card customer? A credit card customer is charged when the customer pays only a minimum amount due.
Correct.
Okay. Similarly, when the customer does not pay on time, then there are significant interest charges and the interest which comes into picture. Whereas in case of BNPL, the charges are still much reasonable.
Okay, got it. Makes sense. And
go ahead, Benny.
Okay. So we are hearing, Chayan, over to you. We are hearing a lot of negative news in this currently because of recession. There are a lot of guys are saying that, right? But of course, there are a lot of new fintechs are all evolving in BNPL, right? How are they actually making revenue out of it? Are they even profitable? I mean, can you give a high-level overview on that?
Mani, most of the BNPLs across the globe are not profitable. They are burning money. With this recession, if it actually this funding winter keeps longer, you will see a lot of either folding up or consolidation. Like Gorav was mentioning today about Zest Money, it's bound to happen. Because it's not that banks cannot do what these guys are doing, but banks are cautious because they have a board to revert to. They have a regular central bank to answer in doing taking unnecessary risk. So it's not that a bank like a HDFC or ICICI cannot lend to those segments. Of course they can lend. And they have a much bigger balance sheet to absorb those shocks, but they don't want to because they take responsible credit. And when I say responsible credit, of course the consumer needs to take a responsible credit, but on the lender also, it is their responsibility to make sure that they're lending to people who actually can pay it back. And you're not going about lending to anybody and everybody just because they want a credit. See, credit is a requirement in the ecosystem, right? So it's not that we can do away with credit, but who to give credit, how much is something which the lenders need to think about.
Okay, and though banks have a very good muscle power on lending, right? But will the unit economics work for them, banks, to get into the small size ticket loans, Chayan? How does it work?
It will not. And a lot of time it will not, because let's say I'm collecting, let's say 200 rupees per installment, and if I have to set up a whole collection team to do that, then the cost of collection will be 3-4 times than the money I have collected. So the unit economics doesn't add up. So therefore, you find banks trying to avoid that kind of a segment, both from giving cards with smaller lines and the same concept, right? and also trying to figure that whole infrastructure to kind of do collections, because these guys, all the BNPL guys actually don't have a collection team. It's all automated. You will just get 3-4 mails following up with you, and that's about it. Because beyond that, if they start having a physical, warm body trying to do that over call, the cost will be just too much for them to bother. You better write it off. You better write it off than try to collect it.
And it is a surprise for me that they don't have a collections team.
Most of them don't have a collections team. When you talk to them, surprisingly, they will talk a lot about their, AI-based, credit underwriting system, and we look at a lot of alternate data. That's great. But what happens if it's a bad decision? If it's a bad decision, right? If it's a bad decision, then what happens? So most of the time you will find they have no answers.
True. Of course.
Mani, what Chayan is referring to, the numbers that he's referring to, let's say if we talk about the delinquency levels, these are not small numbers. These are double-digit numbers. Okay, it's crazy. And over and above that, you have the customer acquisition cost, which is certainly making them burn money. So the point of they being profitable does not arise at the moment. But what is really happening is these BNPL companies are now, their processes are maturing, their models are maturing. And as a result, over a period of time, these NPAs will start coming down, resulting in better margins.
Okay.
So, so Mani, so if you look at Afterpay, for example, right, their bigger margins are from now listing and being a commerce site, right, rather than actually making money on the BNPL. So because too many people come to the Afterpay app, right? Okay. So they've actually started having merchants on the Afterpay app, and you can complete the transaction on Afterpay app. And if you see their financials, they actually make more money. They make around 10% on that just from a listing. And when you go, then they actually make on the lending piece.
But isn't that the real BNPL chain, which is so popular, including the other players in the US and the UK, whereby they are more, not only they are the credit providers, but they are also the e-commerce providers as well. They list a lot of products.
So the point, Gaurav, here is that you can only do that when you become of certain size and you have those many people coming to your app, not for payment, but for, finding things, right? So I think the only two successful guys on that has been Afterpay and Klarna, because given their size. And again, Klarna, if you start looking at, they have started extending loans. They have started charging, so the whole concept of 0% in, BNPL is just a showcase product. They actually they don't promote it anymore.
So let's talk something positive on the side, right? By the way, audience, if you have any questions, feel free to post it over here. Anaga, I hope you're getting some questions, Anaga.
We have quite a few questions already from social media.
Oh, all right. Nice. Cool. So we'll take it up in the later part. And coming back, right? So let's talk something positive, right? So what kind of industries are growing with BNPL, right? If you can give some sample case studies, maybe Gaurav, that helps the audience.
Sure, Mani. So today, everyone wants to build a loyal customer base. Long-term customers means today's youngsters, that is Gen Z and the Gen Alpha folks. For them, it is an attractive financing option. The purchasing power has increased to 6-fold from 6% in 2019 to 36% in 2021. And BNPL is the power in the hands of consumers. The significant growth in the BNPL industry is primarily attributed to the e-commerce business, and it is because it is easy to bundle the BNPL offering in the digital sale of product and services. Now, to give you a few examples on how this industry have grown by integrating BNPL in their business. So today, if you look at EduTech courses, has seen a significant growth. It's like almost 20% growth between the companies who have adopted BNPL and the ones who have not adopted BNPL. Similarly, fashion and lifestyle product has seen a growth of about 70%. And this is what Chayan was referring to. So previously, who used to look at a BNPL for small ticket items? But today, if you look at the Gen Z or even the millennials, they are looking for options whereby they can even fund a small purchase. Travel industry has seen a growth of about 36%. Now, so you can see so many advertisements that you travel now, but you pay later. It is still like it is one of the industry which is happening to a great extent. And electronic products has seen a huge contribution. You will be surprised to know that 70% of iPhone 14 sale was on credit card EMIs. So this is where the target is. And everyday basic shopping sees 60% sale contribution from BNPL financing option, and mostly used by age category between 25 and 44. Similarly, electronic products are the most popular BNPL purchase across, if you look at the industries.
Now, the numbers what you've told is all from Indian market or from global market, is it?
These are Indian markets, specifically to the Indian market. And these are big numbers.
True.
In fact, the conversion rate of when we talk about the sale conversion rate, which is 4% generally, okay, when a particular company or a particular industry adopts to the BNPL as a payment option, this number itself jumps to 6%, which is a huge jump.
Okay, interesting. So, I'll move on to a different space, which is the payments, right? I think the topic is role of BNPL in the payment space. Chayan, being in Pine Labs, you can tell it in a better way, right? So how BNPL is affecting payments in future? People are saying that payments going to be invisible because of BNPL. Maybe what is your thoughts on that, Chayan?
So I don't think payments will become invisible. But BNPL will always be a subset of the overall payments ecosystem. For us at Pine Labs, BNPL is just one more way to pay, and making sure that the merchants have their businesses grow, and merchants, consumers have more choice to pay at the point, and can have a wide variety of affordability services through which they can choose when they want to buy things. Gaurav, as Gaurav said rightly, right? iPhone sale, and Pine Labs is a major contributor on that because we run all the in-store financing options process, and I can't talk about numbers here, but from 2019, the numbers this year on Dhanteras Day was 2.5 times.
Oh, okay, interesting.
So that's the impact BNPL has. The good part about BNPL for the payment companies is that it's a much richer product for us in terms of margins. So all payment companies who actually focus on getting more BNPL providers on the platform and aggregating them for the merchants actually make a much higher margin on this transaction than a normal transaction processing. It's as high. It is as high as 6x of what we make on a normal transaction processing.
Okay, interesting.
And that is why every payment company is offering a BNPL option. So there is a pay later option.
Yeah. Absolutely.
In fact, in my opinion, the BNPL deals really soared during the pandemic as people turned to virtual shopping and started using digital payment apps and BNPL as an alternative to the credit cards. By helping these consumers break down large expenses into smaller EMIs, and they were able to offer the perks which no credit card company could offer at that point of time.
True. The other thing, Mani, is, and Gaurav rightly said that it's mainly e-com. What happened is that credit card was built in an era which was not mobile. So the credit card journey is still not the best, mobile journey to complete a transaction, right? Whereas these industries or technology were built mobile first, right? So the user experience, I know a lot of people who have credit card, but the checkout is cumbersome. I have to go look for my card, import it. 2 clicks here and you're done, right?
and we don't carry our wallets anymore. There are no wallets, there are no credit cards. So it's very difficult.
So it's very difficult. So, people who have actually put their card to top up this and then use this to pay.
Absolutely.
Because the UI, UX is high. Also, as Gaurav said, that, BNPL players were burning a lot of money, right? So they were giving a lot of cashbacks, a lot of discounts and all of that. So obviously, even if I have a credit card, I'll put it there and then go get my credit card cashback or points plus the cashback and points which the BNPL company is giving, right? So from a consumer point of view, it was the best time they had.
True.
Okay, interesting. So you are saying that BNPL not only on the convenience side, but that will also improve the loyalty points, cashbacks. People are also going behind that, is it?
Absolutely. Now from a BNPL provider perspective, does it make sense? I don't think. But they want to retain the customer. They want the customer to keep spending.
Customer acquisitions, yes.
Customer acquisition, retention, engagement. For all of that, they do that. But obviously, there is a cost attached to it. But how long they will keep doing it, I don't know. But as of now, if you are a consumer, just enjoy it.
Okay. I think it has to become a behavior pattern. Now, who goes to, let's say if I want a takeaway, I don't go to a restaurant anymore. I just use a Swiggy or a Zomato. So it's maybe to a certain extent, it is playing a role on the behavior pattern of the millennials as well, because no one wants to move out these days. So, and the more e-commerce websites or the e-commerce apps are going to perform, the same way BNPL will follow the path as well. So
great, super. So we are hardly 4:30 now. We didn't know that we have crossed half an hour. By the way, while having this discussion this last half an hour, right, Gaurav, you were saying something called subvention, right? So maybe to the audience here and people who are in fintech space, right? This buy now, pay later and subvention go all along, right? So can you tell me what exactly subvention is?
Yeah. So theoretically, subvention refers to the act of providing financial assistance. This can take the form of direct financial support, or it can be an indirect support, such as providing favorable terms or conditions. The main aim of subvention is to make the transaction more attractive to the party receiving the support, and so increase the likelihood that they will enter into it for sure.
By the way, Gaurav, it sounds like a very...
So Mani, let me just... Simple terms, it is the interest part. So whenever I'm lending, as a lender, I need to earn something. That earning is generally the interest. Now, there are two parties who can pay the interest. One is either the consumer can pay the interest, that I take a loan, I am charged an equal installment, which includes the interest component, or the merchant pays the interest to the lender, saying that I don't want the customer to pay anything more. I have enough margin to cover the interest which you would have otherwise charged to the consumer, and I will pay on his behalf. In our world, that is subvention generally, where the merchant pays it. Now in India, you have another variant of that, where the brand pays the subvention. So if you go to Apple or Samsung stores, it is not the dealer who is bearing the subvention, it is the principal who is bearing the subvention.
So if I understand rightly, the subvention can be borne by either obviously the borrower or the dealer, or it could be the brands, right? Say assume that if I am getting a TV of say 1 lakh rupees, the Sony itself as a brand can give a discount, say out of their 20% profit margin, they can give say some 2-3% as a subvention, so that the sale will get increased, right?
Yes.
That is one. And even dealers like Vasant & Co or Vivek's, they themselves give some.
They themselves.
Okay,
yes.
got it.
It is at multi levels.
All right. So now, in this half an hour discussion, I came to know that a lot of Gen Z and Gen Alpha, right? I even never heard about Gen Alpha. I don't know what it is, but anyways. So these are all.
They're also called the glass gen because they're always on their device.
So what attracts them more, right, Chayan? So what is making them for more lucrative, right? Can you give some examples?
So two things, right? It's a generation which is always connected. right? So it's a generation which always likes things which is easy to do. You don't ask them too many questions. You don't ask them to do too many things to avail something. They will take it. You, from a bank perspective, you go to the bank, find a form, give 10 documents, prove your boss not interested. So traditionally they gravitate towards things which are easy, 2 clicks. That's because that's how they have grown up, right? Within 2 clicks, it should finish. Anybody who asks me to go more than 2 clicks, because I'm not interested. So therefore they keep gravitating something which is easy user experience, faster to navigate, and transparency. See, one of the things with credit card always has been people to a layman that the banks are not transparent. So the interest on interest, when I will charge you late fee and I will add that, and when you pay, what I will knock off, payment hierarchy, right? I will first knock off this charge, but the rest of on I will keep paying, keep charging you. So people don't like that, unless you are in a credit card industry. I'm telling you, it's impossible for you to understand the charging methodology which banks. Now on BNPL side, what has happened? They're pretty transparent. You don't pay on time, I will charge you whatever, 50 rupees or 100 rupees as a late fee. That's about it. So people like that. I don't have to think too much about it because I don't have time for all of this. Right? This is not my life. I'm not a credit guy. I want a credit. You agreed to give me a credit. You were absolutely transparent, told me if I don't pay on time, you will charge me 50 rupees extra. Great. I'm okay with that.
So these Gen Z guys, right? I'll take that as an age group of 18 to say 25, right? Of that. So assume that they don't, 18 to 22, they are in college, right? So they don't have any proper income or, they don't have any proper bureau score, or their score will be very thin or even -1, right? So they don't have proper income. So how do they even getting loans? Right?
So that's where the alternate scoring comes, right? So they look at what device you are using, right? So somebody is using an iPhone and trying to do it, they know, okay, that the person, either the father is rich or, is doing something which is making it afford, so he will pay, right? So because you're using alternate data to underwrite, right? And because you're not asking him what's your source of income, right? You're just like, so therefore they are able to get it. And that's what that generation likes. That don't ask me too many questions. You think I am eligible, give it to me. If you don't think eligible, it's okay. Don't give me.
So if I understand rightly, Chayan says that people who are having iPhone, you will get a BNPL instantly, right? Okay.
This is what I've heard from the BNPL players. This is one of the things they look at, the device.
No, and you can see today there are money coming on the other side as well. When you look at there are parents who are giving their pocket money using cards like FamPay, etc., whereby these can be used by those teenagers, whereby they can just spend that money, and there is an accountability associated with that spending as well. So considering that there is a bit of a control which is installed at the point of spending as well. Okay, so that way these are becoming popular, and you can see millions of people subscribing to it. So it's not just to do with the credit eligibility of the actual user. It can be just the parent as well. Okay.
So now comes another very interesting part, which is the tech, right? So Gaurav, I think you've been in this technology side, right, for a long time. So what is the role of technology in BNPL, Gaurav?
Yes, Mani. So see, technology has always played a major role in the implementation of new business models and payment plans, and BNPL is no different at all. Now, BNPL service providers have utilized technology to create platforms and solutions that make it easy for merchants to offer BNPL to their customers. For instance, today, there are platforms whereby the merchants can onboard themselves onto the BNPL platform. That is, they don't need to really get in touch with the BNPL service provider. It's a self-boarding kind of a arrangement. Similarly, technology in mobile apps make it easy for customers to sign up for and use BNPL. These solutions have been designed to be user-friendly and offer a smooth user experience. In most cases, the onboarding is so smooth that with just few clicks, as Chayan rightly said, on your mobile, the BNPL limit is set up and you did not even realize that you have availed a credit limit. It's just so quick. The technology is also used for developing backend, which powers these BNPL platforms also. Now, these include various, there are various data analytics, as Chayan was mentioning that, okay, if there is a request coming from a iPhone, so that's a valid data point. There are fraud detection and prevention processes, and there are various payment processes which are associated with the backend as well. So all of these solutions have been essential in the successful implementation of BNPL. Without them, BNPL would not be able to offer the same level of convenience, security, and flexibility that it does today. So yes, BNPL was then, it was available then, it is available today also. But today, the way it is put together in a gadget and it is so easy to use, that is what is technology has enabled from a BNPL perspective.
Okay, interesting. Chayan, if you want to say something to add on technology front?
No, so technology is the enabler for anything we do, right? So, and without technology, a lot of business models there are today are only there because of technology. They were not there before, and BNPL is a classic example, right? Which as a business, so credit as a business existed, but BNPL as an industry would have not been if the technology was not there. And again, right from customer acquisition, telling the customer what to do when you want, onboarding a customer, doing his KYC, doing his credit check, actually giving him a credit, then helping him do the transaction, closing the transaction, doing collection from him. It all happens seamlessly because of technology. There's no human intervention anywhere in the whole process. So now think if technology was not there and you didn't have connected mobile. Let's look at 15 years back, right? When you had those Nokia phones, right? You think you could have done something like this? No. You can do today because what the technology is able to provide you. That's why you're able to do certain things, and certain businesses exist because of that.
Okay. I think technology plays a major role, no doubt about it.
You would know more, Mani.
Sorry?
Absolutely.
You would know more.
You are the technology enabler.
You are the technology.
Yeah. So being this space, right? One more thing, I recently heard that from the collection standpoint, on the technology side, obviously UPI plays a major role that helps the collection process more quickly. And rather what BNPL companies are doing it, right? I recently heard from a case study where instead of making them default and then collecting it again, right? Rather, they are incentivizing the borrowers. If they pay upfront, they get some instant discounts so that the payments could be prompt, right? So that they are reducing the defaults. That's what I heard it. Maybe. So moving on, right? So first we started with the negative, then positive, right? So again, we are going to on a very important topic, which is on the regulation part, right? So Chayan, that is again the important bus. Everybody is waiting to hear from RBI. There are a lot of new regulations have been introduced, right? So what is your stand on that? I'll come to you, Gorav, on that same
absolutely.
standpoint. Yeah.
So from RBI standpoint, maybe Gorav will share. I'll just share a more global phenomena, what's happening on the regulatory side. Now, if you look at RBA, which is in Australia, you look at MAS in Singapore, you have Fed talking about it, you have UK regulator talking about it, EU regulator talking about it. So what you will see is that do regulators like more credit for the people? Of course, they like it. It pumps up the economy. There's more spending power in the hands of the people. There's more consumption. The economy is doing well. So of course everybody likes it. But at the same time, they also have the responsibility to make sure that people are not over leveraged. and there is not a lot of bankruptcy happening, right? So that's their social responsibility. And luckily for us, most of the regulators take it very seriously. It actually helps the industry to keep in balance, check and balance. Otherwise, sometimes we have very ambitious and crazy entrepreneurs who could go crazy and then make it very difficult for a lot of people in the ecosystem, and it sometimes gives a bad name to the whole industry just because of one or two people.
Any recent, sorry to interrupt, any recent examples that you can throw on this?
MAS came up with a regulation on responsible lending, I think 2 months back. 2 months back, and they made all the BNPL guys sign it and agree to it. Who will you lend? How will you lend? So, for example, in Malaysia, the central bank, when the banks or a non-banking financial company lends, you have to look at something called as DSR, which is debt service ratio, right? But the BNPL players don't look at it because they underwrite using a very funny method called factoring. So, so because they use factoring, they are not, essentially under the ambit of the regulator. Okay. Now, obviously, the regulator is watching it, and the regulator has already put up a discussion paper with the industry. So we know that there will be a regulation which will come, and certain things which bank follow, these guys will also have to follow, and it is important. It is important, like you said, that all these guys all these consumers who like everything in 2 clicks sometimes don't realize that they have just taken a credit. Right, and they have to pay back, like Gorav was saying, right? Because to them it is, it's an impulse. Then there is incentive, like, okay, I'm paying back a cash or any other means or a bank transfer. I'm not getting this incentive. I pay with, this, I will get, let's say, a 200 rupee off, right? So suddenly, of course, I'll pay. But you didn't realize that this is just not another payment. You actually took a loan suddenly.
True. They didn't even know they are taking a loan, and then they are having. Okay.
And then they have
Absolutely.
Absolutely. And because the seller is then pushing, oh, now you have a loan. Why you want to take this phone? Why don't you take that phone, which has 4 other things on that, right? And suddenly, yeah, of course, let me do that, right?
See, in fact, the price tag becomes irrelevant the moment you have this. Okay. Now it is up to the consumer to choose the right thing. Whether to become a victim of it and get into a debt trap, or stay focused that, okay, this is what my need is, this is what my budget is, and I stay within that budget and pay it to ensure my finances are right. So that is the primary thing which we have to look at it from a consumer perspective. Now, RBI also does not want anything different. The regulator is also looking at the same thing. What they're saying is, their main aim is that to safeguard the interest of the consumers. Now, accordingly, the steps taken by the regulator to strengthen this ecosystem is certainly going to increase the confidence of the people availing these services. Now, these introduction of digital lending guidelines is certainly a welcome move for the fintech industry. Everyone has said that, yes, this is something which is happening is good, because this is going to remove that middleman or the unauthorized kind of people who were playing in this industry. And when it comes to the money, none of the regulators are ready to have the shadow banking effect, whereby there's something happening at the back, and that is not being regulated and that is not being controlled. There have been so many instances in India we have come across whereby there have been instances of harassment. In fact, a lot of people talk about the recent one which happened in case of the tractor confiscation. So these are things which regulator does not want to see, and no one likes to see these. So yes, in a way, yes, whatever, whether it is the digital lending apps or the we call it as the digital service providers, the lending service providers. So there has to be the differentiation, and everyone has to follow their respective regulations to fulfill the requirements of the RBI.
Got it.
So I believe this is a welcome move, and it will only boost the confidence of the customers, and which will further increase the usage of these services.
So on that regulation standpoint, right, Gaurav, say for example, if I opt in for new fintech apps like Simple or Lazy Pay as Just Money, right? So I'm taking a credit. So will this affect my score, or will it be? Will it come under radar of RBI? How's that, Gaurav?
Yes, certainly, Mani. In fact, the moment you avail a credit, okay, let's say we were talking about people clicking on maybe 2 clicks and then you get the credit.
Correct.
Even if you don't get a credit, this gets registered as a inquiry in your bureau score. Okay, so certainly the BNPLs are not exempted from reporting to the credit bureaus. Every transaction that you do on the BNPL applications are being reported to the bureaus. For instance, now it's a one way, if you do it well, that is, you avail the credit, you repay it on time, then it enhances your score. Whereas if you miss a EMI, if you don't pay on time, then it will bring down your score to a significant extent. Okay. So certainly there is an impact on the credit score of the users.
But tell me one thing, Gaurav. This triggers me a question. So I heard a survey that Chayan, you can also step in. I heard a survey from Cred that has been recently done, and they said that 70% of the credit card users doesn't know that their interest rate is less. They are thinking that their interest rate is less than 20%, but it's not, right? So these Gen Z guys who are availing for this BNPL, they do care about these interest rates and all.
So, of course, people care, because here what happens today is that any bad travels very fast. Any bad news or any bad segment in this segment travels very fast. They're super connected, right? So they care. And this is when I talk to a few of them, I realize what they don't like is they don't understand it. And the banks, under the big list, and somewhere small in the subprint has written it, which they don't like. So therefore, that's why they prefer, the BNPL guys. So yes, one is it is easy, the user UX is nice, all of that is good, but also transparency. So you will see globally, one of the big reasons for the rise of, now if you look, and why I say this, because let's look at a market like Australia, right? In a market like Australia, everybody has on an average 5 credit cards, right? Then 5 credit cards. So it's one of the countries in the world which has the most per capita credit card. Now you would think, why would a country which has 5 credit cards, Afterpay would become a rock star company? And there are not only Afterpay, there's Zip, Afterpay, and so many in Australia doing very well, right?
Yeah.
Exactly the same thing. People just love the transparency. And of course, the money they burnt and with the discounts and all of that all of that also has played the role. But more than that, it is about, it was easy, it was designed well, it went after the people who were not able to, or didn't like the whole user experience, and of course, they were burning money, so people enjoyed it.
So add on to that, right, Chayan? So we all talking about BNPL, right? Buy now, pay later, right, Chayan? What if it is buy now, not pay later, right? So if they are not paying later, so how these fintech companies or NBFCs are able to focus that, because there are a lot of recession, there are a lot of negative news also spreading out, right? So how these NBFCs or fintechs are prepared for these?
Actually, most of them are not prepared, if you ask me. Most of them are not prepared. So they would like to think they're prepared, but they are not prepared. When they think that people will take loan, pay it, take loan, pay it, but that doesn't happen. And frankly, because the way they are structured, it is all automated through mails and all of that. In most of the countries, BNPL guys don't even come within the bureau ecosystem. So even if I default, they don't even report it to the bureau. So as a consumer, I don't even have that scare. The only thing is, okay, this guy will not give me any more loan. It's okay, I'll take it from somebody else, right? As a regulator, also going to your previous questions, as a regulator is also trying to save the companies also, right? Today they don't do it because, growth is primary, everything else is secondary. But regulators also don't want companies going bankrupt, right? And if you have started, because it shows badly on the regulatory ecosystem, the country, everything, right? So they don't even want that. So therefore, it's pertinent that everybody, falls within the ambit. There's a guideline. Classic example for India is when RBI came into in the payment systems, right? In terms of defining payment systems, setting up rules, regulations. You see where the industry has gone. Right, you see the quantum jump. Everybody, when RBI started setting up, things and coming up with, regulations, price, everybody, the whole industry was shouting, right? The incumbents were shouting, "Oh, this will kill the industry. It will go down." And you see today where it is.
So, and Gaurav, you were saying that the default rates are going double digits, and then soon it will go on a settle, right? Okay.
Absolutely. No, in fact, from fintech and NBFC's perspective, there was just resort to foolproof underwriting mechanism. The business rule engine used for underwriting must have provision to identify credit-hungry profiles. That's very important. Once you are very clear on that, whom to lend and whom not to lend, then you don't land up in a situation whereby you are really just burning money, and then, as Chayan rightly said, the cost of collection becomes more than the actual EMI itself. So, which is certainly
on that note, right? Chayan, you can also step in. So credit hungriness, right? So there are two things. One is the ability to pay and then intent to pay. So through technology, we'll be able to identify the ability to pay through analyzing their income statements and all, right? So intent to pay, how do you identify any logics that you guys use?
Intent to pay, well, Gorav would have a better answer to that, being a lender. But intent to pay is through alternate data sources, where he goes, what kind of a profile, where he comes from, things he visits, all those things. And you have to have a very sophisticated engine to analyze those things and then say, hey, listen, I think this guy is not in the category of has the intention to pay. Right? So there is see, unlike the ability to pay, you have a very clear place to go, right? I go to check the bureau, I will check his income, and I will know whether he is the ability to pay or not. Intent is very difficult to find.
Correct. Yeah.
And difficult to figure out, and therefore requires a much higher level of sophistication, as Gaurav was saying, on the lender side. And people who are successful are actually who have great algorithms which are able to detect intent to pay, not the ability to pay. Ability to pay, everybody can tell you.
Correct.
And today we are able to use factors like what sort of applications this guy is using. Is that person using too many gambling applications, or if that person is this person regular on payment of the utility bills or not, if there are any defaults around that. So these are some of the factors, but as Mani, you rightly said, there is no foolproof system of assessing the intent to pay. It's impossible. I may be good in everything, but then if I don't want to pay, I just don't pay. That's it. And these things are very situational also. Sometimes there are situations also which play a larger role. And when people don't follow, so what happens really is that, so I know that I'm having a financial crunch and I don't have money to pay. In that case, now when people are not chasing me, when they are not following up with me, then it becomes all the more, I become lethargic that, okay, anyway, no one is asking me. So then why should I pay? So, but then this puts them into a kind of a debt trap whereby it becomes very difficult for these people to come out of it. So then they resort to high value loans. So loan to close the previous loan and then another loan to close the next loan. So that's how it keeps happening.
Okay.
So we do come across quite a few such profiles, Mani, whereby people have borrowed at exorbitant rates and then they come back. And in fact, the reason for the borrowing they give itself is that they want to borrow to close the other high interest loans. So,
Cool. Quick time check, Anaga and Vaishnavi. We keep talking. If you allow us one day, that will last enough for us. So how much time do we have?
So we're at 5 o'clock right now. Maybe we can take a couple of questions, and I think some of the topic can be addressed during the questions itself.
Cool. So I'll just bring out last 3 questions, I would say. So with respect to small business, right, how BNPL is propelling their cash flows, Gaurav?
See, the way BNPL works is quite simple, and we almost like we have discussed quite a bit on this, and it can be a major help for small business when it comes to improving their sales and their cash flow. Now, let's say when a customer buys something from a small business using BNPL, the business gets paid immediately, subject to that small fee. Now, this can be a huge help for business who often have to wait 30 days, 60 days, or even 90 days for the invoices to be paid. And especially even now that you have started to see the BNPL for services. So there are services whereby you can avail the BNPL and you can pay over a period of time. And the BNPL has also given a way for MSME lending, whereby there are large NBFCs who use the data which is received from the BNPL platforms, and they get MSME loans to fund their business. In fact, I know Pine Labs doing that activity as well, whereby they're able to fund the merchants itself based on the transaction that they do.
Yeah, so we work with NBFCs at the back to do that. But yeah, you're right, Gaurav. So one is on MSCs using BNPL for their businesses and the growth of their businesses. The other is obviously, traditionally, that, the corner store would always give you a 30-day credit or a 60-day credit for you to pay as a consumer, right? That I'll pay. Now that also these companies have taken over, right? So that guy is getting cash right at that same instant with the fees. So his cash flow is improving, right? So so there is a B2B phenomena which is happening, and in fact, India is doing a lot on the B2B side of BNPL, whereas in other places it is all the B2C side of B2C. BNPL. What you hear, B2B side of BNPL is not very prevalent in other places actually.
So coming back on the Chayan, on the trends, right? So what kind of collection trends that you can see it on the BNPL side? Any recent innovations?
Gorav, go ahead. Yeah, I'll go for that. So certainly, Mani, there are plenty of innovation happening on the collection side, and being in touch with the customer is the key for maintaining a healthy collection cycle. Okay, and now this is the only way. The moment you are out of sight, you are out of mind. Okay, so there are various means today. You can see there are automation tools which are available for collection process, be it in the form of auto SMS or email reminders, pre-recorded IVR messages. There are even ways in which you can assess the possibility of a default even before the due date. Okay. So that means there are algorithms whereby we can even assess if someone is going to default on the due date or not. And accordingly, a precautionary step is taken so that the collection can be made and it is successful. Okay. And all these automation work in integration with your LMS itself. So that way, pretty much like it reduces your collection cost also. So because there is hardly any manual intervention or people required to be to handle this.
Makes sense. Okay.
Yeah.
And last question, Chayan, you both can step in. So on the frauds, right? What are the different frauds that you are foreseeing in this BNPL, Chayan?
So one is typically the first is identity fraud, right? So I act for somebody, and then there are transactional frauds. Then of course there are merchant-led frauds because the merchant uses it and obviously gets to use somebody else's and do transactions, increases sales and all of that. So frauds actually, Mani, are the same what you saw in payment industry before. So it's not changed much. It's the way it is done and the technology which is used. Obviously, this is a fully connected ecosystem. So if you are a tech hacker, then for your ability to go through the system is much easier because everything is connected. So what I hear from some of the security guys is that according to them, BNPL is primed to have a systematic hack sooner than later, because
Correct.
a lot of the smaller guys, actually their systems are not that great. So the bigger guys, of course, I'm sure they do whatever it takes. But a lot of smaller guys in this whole, the funding spring came, right? Right, like funding spring and funding winter, right? So funding spring came, they were mushrooming like nothing, right? Everybody wants to do BNPL, right?
Correct, yeah.
And it's easy to say I want to do lending business, but boss, it's the most difficult piece to do. It's the most difficult business to do lending. Lending is easy. Collecting that is
exactly. Lending is a collection.
And even from from the standpoint of the companies as well, the tech companies as well, resorting to some of these VAPT and some of the cyber help of the cyber experts is something which I'm sure can help. In fact, we did one on our systems, and there were so many things which came up, and we fixed those. So if you really, and these are not very expensive exercises, I'm sure most of the NBFC people or people who are using tech, they can certainly use this. They can evaluate to engage a consultant who can help them in at least removing some of the vulnerabilities which are so obvious. Okay, and now when it comes to identity fraud and all, it is purely to do with your the flow of the checkings that you do. For instance, we hardly take any information from the customer. We use fetch to get the data from the various government agencies and then cross-check those data points. So that is a way we can avoid some of these frauds. And even from a consumer perspective, they should use only trusted BNPL websites and applications, whether it is for BNPL or whether for lending also. They just shouldn't be going to any random app and applying.
Yeah.
And they should not share their personal and financial information with anyone. Now, there are so many instances whereby they share their PAN number and the Aadhaar OTP and so many things with their. So which is where the problem is.
Yeah.
So I think, and today RBI is playing a significant role. If you, I don't know, if you watch KBC. Amitabh Bachchan is made to talk about so many of these KYC related frauds or other frauds in the show itself multiple times. So there is only a bit can be done by the actual tech company or the service provider, by the regulator, but ultimately consumer also have to be little vigilant, because it is ultimately their data.
And recently heard that there are more than 2,000 illegal apps have been removed from the Google Play Store.
Google Play Store.
Yeah.
Yes, that's right.
Cool. Then, so over to you, Anagha and Vaishnavi. I think we made some sense to the audience. Let's see.
Absolutely. And, our community is synonymous with curiosity. And this insightful session has sparked a lot of questions. And in fact, most of the questions were answered, right? So, but we'll take some time now and we'll address some of the questions from our live audience and our community on social media, right? So over to you, Anagha. So what's the first question?
The first question that we're getting is from Rakesh Agarwala. So Mr. Rakesh asked, do these BNPL have set up their own NBFCs, or do they collaborate with banks and NBFCs? So if the latter is yes, so if the collaboration is something that's a yes, then how exactly does this collaboration happen if some bits of light can be thrown on it? So this is open for all the three gentlemen. So anybody who would like to answer.
Yeah. So maybe I'll take this, Mani. So Anagha, and sorry, what was the name of the gentleman?
Mr. Rakesh.
Rakesh, okay. So Rakesh, there are multiple, as I mentioned in the starting point, there are multiple stakeholders which are involved in the BNPL scenario. Now, there can be an arrangement between the tech company, which is the BNPL service provider, and a lending company or a bank as well. Now, these arrangements can be deeply integrated, whereby if you have to provide this on a technology platform, the platform should be able to enable the transaction. Now, I can give you an example. You have this Amazon, right? And Capital Float is one of the partner for Amazon for providing the BNPL service. So the Amazon becomes the aggregator who brings the platform, and Capital Float is the NBFC, which is the lending NBFC, which actually lends the money and earns charges or interest out of this arrangement. So with banks, yes, large banks, so far I'm not too sure that banks have entered into any BNPL arrangement, but for they having their own arrangements. For example, if I'm right, HDFC has got their own BNPL arm, as well ICICI has got their own BNPL arm. I can think of only these two. Maybe Chayan and Mani can add if they have more information about this.
I think that answers to them, right? So, yeah, Anaga, you can move on to the next question.
Super. Thanks for that. I think next question, we did speak about the sort of a loss experience and the way it is affecting the consumers as well as the lenders. So here, this is a question from Ankur where he asks from the point of view of a BNPL player only. So here's the question, I'm reading it verbatim. Given huge loss experience with global as well as domestic BNPL players, what do you think is the way to build a profitable BNPL business? So maybe 2 to 3 sort of tips or some sort of pointers if that can be touched upon.
So again, Anaga, nothing changes, the basics of business, right? Your income should be more than your cost. That's as simple as it goes, right? So lend responsibly, lend to the right people who have the ability to pay first. If you have the way to figure out the intent, great. At least make sure that you lend to people who have the ability to pay. Make sure, like Gorav mentioned before, be engaged with your customer so that they are, and keep a check on the cost. Well, it cannot be growth at any cost, right? So don't burn unnecessary, and make sure that when you are lending, you are pricing it right, so that you can make some money out of it, right?
Ultimately, sticking to the fundamentals of the business is what is required. It's certainly a no-brainer. It's just that people are not doing or incurring these losses unintentionally. These are intentional losses. They know that they are burning cash, and it is done with the view of maybe achieving something bigger. But then we are not sure if that is really happening, because what we are seeing today is a distress sale of, and we don't know if it is a distress sale of a large BNPL company, which the news has come out today.
Another on top of that, right? How does that make it a profitable business? One suggestion could be the co-lending, right? So co-lending with banks, so that the risk will be, it's like 80-20%, where 80 will be borne with the banks and the 20% will be on the NBFC side, smaller NBFC, and so that they can lend to more people, and then so then if lend to more people, then the profitability will increase. But of course, they should also lend to the proper people, like the fundamentals should be right, like Chayan and Gorav said. Yeah, that is the one tip that I can give to them. Yeah.
Make right decisions is what our panelists are definitely saying. Ankur, hope you've made a note of all of these. Moving on to a few more questions. So Srini asks a very interesting question. So we spoke about travel right now, pay later. We spoke about buy technology, pay later. But Srini asks, so what about the scenario in gold? Like, is there a BNPL scenario in gold, and what are your thoughts and comments on it?
I think gold as a segment always existed on BNPL, right?
Yeah.
You go to any jeweler, they will give you credit card installments, and all these guys, always had installment available. Gold has always been a risky segment because you can buy gold and quickly sell it off. From a fraud perspective, gold is always a high risk category. But BNPL and gold has always existed. The only problem might be the ticket size. Yeah. Because gold, generally the ticket size is high. Your BNPL ticket size are generally low. So it might not suit that category of business when you want to do BNPL.
But one thing which I have noticed, some of the, and this is very typical, which I've seen in the South India, especially in Tamil Nadu, that there is also pay now and buy later in gold. So basically, the jewelers collect the money upfront on a monthly installment, and then they make you buy it at a later stage at a price at a later date.
They'll give a
this
scheme.
Is interesting.
They'll give a scheme. Yeah.
So
True. Well, good point, Gaurav.
Super. Thank you so much for that. On that note, moving on to this one of our other audience member, Meenakshi Ravikumar. She asks this. She says, I own an interior company which is in Bangalore. Is it possible BNPL can offer my customer loans like Bajaj Finance? So if anyone can throw light on it.
Certainly. So Bajaj Finance itself is a BNPL. It's not different. And certainly Meenakshi can tie up with the various other BNPL service providers. So let's say if a customer does not have an eligibility on Bajaj, they can try something else. So Bajaj is in fact, they are the leaders in the BNPL market. They're the ones who came in first into the Indian market.
Thank you so much. We're almost at the last end of the Q&A session. So here's one question from Raghavendra. Raghavendra says, considering payment processing companies like Visa and MasterCard, they take a cut on transactions, right? So is there a way BNPL companies go for a different payment processing options to thicken the margins? So question is on that front.
So from a payment processing perspective, yes, the schemes, obviously they have a business to run, right? So their business is payment processing. So obviously there's a cost to the payment processing. Now, two things. If you're talking of interchange, so the interchange goes to the issuer for giving you that credit period of 45 days, and that's their income. Now, if as a BNPL provider, you don't want to use credit card, and why BNPL providers use credit card is because of two reasons. One, it makes the collection and the underwriting easy because it's like a pseudo underwriting. Somebody is already underwritten, the guy must be good. Okay, let me, So generally, the lines given to somebody who is putting a credit card for BNPL is much higher than if you put a debit card or a prepaid card or link your account to, right? So as a BNPL provider, it's up to you. The options you want to give and the cost for those options you want to bear for your consumers, right? So whether you want to link your account, which could be literally free of cost to pay from the account, versus linking your credit card, obviously, then you become the merchant on record and you're actually paying a MDR on that transaction.
Thanks for that.
So I think we've touched upon different topics, and this is just adding on to Meenakshi's question. So what would your advice be to young startups in the fintech ecosystem? This is just open to all of them.
Mm-hmm. Okay, I'll go maybe first. Being one of the young startups ourselves, what we are learning on a daily basis. So it's not more an advice, but sharing of what we have learned so far. So first thing is that focus on understanding the rules and regulation of the industry. Focus on the niche first. So what is the niche that you're bringing to the table? Focus on customer-oriented services. As we all know, customer is the king. and invest in easy to use, fast and scalable technology, because technology is the game. If you're not scalable, you won't be able to proceed further. And finally, have a very right and a tight team. So this is what my take would be.
I would say that, do business because you want to do business. First fundamentals of business. You do business to make profit, not not to say that, I have
not burn money.
Don't burn money. Not to say, we have grown 1,000%, 2,000%. No prizes for that in the long run. Actually, second is look for what you're solving for. Be very clear of what you're solving for. Very important. Just because fintech is the fashion of the is in fashion this season, don't go after fintech, right? If you don't know lending, if you don't have a team which does not know lending, don't get into something which you are not aware of, right? So do something which you know, which you think there is a niche, as Gorav said. You be very sure of what you are solving, and make sure that you do a business because you want to do business. The traditional businessmen, you look at the Marwaris, the Gujaratis, and there is something inherently the way, because they do business to make money. At the end of the day, if you list your business, you have responsibility to shareholders. If you are a private, you have a responsibility to your fund, investors. So be very cognizant of what you are doing.
So I'm also like as young as Gaurav. So, my suggestion is to the audience is, how many of us know TikTok does lending, and YouTube in China does lending, and if you take any top 100 internet companies in China, they're all into lending, and there is a different way to look at it, right? So embedded lending is the next big thing in India also. As Chayan said, that the B2B BNPL is picking up really hard. Hardly very few players are doing it. Rupify is one of the use cases that I've recently learned. Talk to the customers. That is one major suggestion that I give to all the audience here. Keep always talking to the customers, understand their pain points, solve it, period. That's it.
A lot of different perspectives are what we have got here. Thank you so much, all of you. And also so many case studies so that it can help us in understanding the nitty-gritty so beautifully. So on behalf of the community, M2P Fintech, my co-host and myself, thank you so much for being a part of today's panel discussion.
Thanks, Anaga.
Thank you, Anaga. Thank you, Steven. Thank you.
One important update to the audience. I think I've never seen a webinar has been conducted such a well-organized way. Thank you. It was a wonderful experience that I've learned from your team, Tether. My best wishes to you guys.
Thank you so much for that.
Absolutely. Thank you.
Thank you so much. Yeah. Bye.
Thank you, everyone.
Thank you all.
See ya.